It's all covered in today's China Truths.
Across cities and villages, from Guangdong's skyscrapers to Henan's dusty towns, a silent nightmare is unfolding. People walk into banks and walk out with nothing. ATMs don't work, online banking freezes, and for millions of Chinese citizens, a terrifying realization is sinking in. Their life savings may be gone. Lines of desperate customers snake outside shuttered branches. Protesters hold up signs begging for access to their own money. On social media, videos surface, then disappear, showing elderly citizens banging on locked bank doors, live streamers being dragged away, and whispers of system upgrades, masking what many now believe is a full-blown liquidity crisis. For decades, the Chinese banking system appeared unshakable, state-backed, party-controlled, and too big to fail. Rural banks served farmers and pensioners. Giant lenders supported real estate, infrastructure, and local governments. Trust was never questioned. Until now, behind the facade, a slow collapse has been brewing. Years of reckless lending, shadow banking, and toxic investments in failed property ventures have hollowed out the system from within. Smaller banks in provinces like Henan, Hebei, and Shandong lured depositors with high returns now exposed as unsustainable. As the property bubble burst and debts piled up, cracks became canyons. Authorities tried to plaster over the problem, injecting cash, merging weak banks, censoring bad news, but the dam has broken. Henan's village banks were the first to freeze withdrawals. Officials blamed IT maintenance. Then came silence. Weeks passed. People protested. Some were beaten, some vanished. Still, the withdrawals never resumed. Now the crisis is no longer local. Daily ATM limits have dropped to as low as 300 yuan, around 40 USD. Transfers fail without warning. Balances appear altered. Some accounts are flagged for unusual activity simply for holding over 10,000 yuan. Even fixed deposits are being locked up under vague legal excuses. One viral post from Shenzhen showed a bank notice freezing withdrawals above a certain threshold. The account was banned within hours. Others report similar experiences, but few dare to speak up. The message is clear. China's banking system is no longer untouchable, and for ordinary citizens, what once felt secure now feels like a trap. China's financial meltdown has quietly begun, but no one is allowed to say it. Across China, fear is spreading faster than any official announcement. In the early hours before sunrise, lines form outside bank branches. Desperate citizens, young and old, withdraw small amounts from multiple banks, hoping to avoid triggering suspicion. Some convert their savings into gold, foreign currency, or digital assets, despite Beijing's harsh bans on crypto. And it's not just individuals. Small businesses are suffocating. In Guangdong, factory owners say they can't pay workers or suppliers because bank credit has suddenly been cut off. Construction firms report halted projects as promised loans vanish without a trace. Gig workers complain their payouts are delayed for weeks, even as apps insist the money was already sent. Meanwhile, state media maintains total radio silence. No headlines on CCTV, no emergency statements from the People's Bank of China or the Ministry of Finance. Instead, propaganda channels push messages of unity and trust, while behind the scenes, banks freeze funds without warning or explanation. Whispers flood social media. Is this a trial run of a soft bail-in where citizens absorb the losses? Is it a stealth move to force adoption of a fully surveilled digital yuan? Whatever the reason, the outcome is the same: chaos, confusion, and collapsing trust. A question now echoes across the country. If I can't touch my own money, do I have any rights left? This isn't a random glitch. It's a structural unraveling. Rural banks are crumbling under pressure. Local governments are drowning in hidden debts. And behind the scenes, an invisible network of shadow banks, rural cooperatives, credit unions, high-yield platforms, has been gambling with trillions in savings from migrant workers and retirees. For years, these unregulated institutions promised sky-high returns, but instead of safe investments, the money was funneled into high-risk real estate schemes and failing local government projects. When those bets collapsed, so did the institutions. No safeguards, no accountability, no refunds. It started in Henan, where banks suddenly blocked withdrawals. Authorities dismissed it as isolated, but it wasn't. It was the first crack in a much bigger fracture. China's real estate addiction was always a ticking time bomb. Developers borrowed endlessly, banks lent blindly. Homebuyers poured money into apartments that didn't exist, clinging to the fantasy that prices would rise forever. When giants like Evergrande and Country Garden collapsed, the illusion shattered. Now, ghost towns filled with unfinished buildings stretch across the country. No more loan repayments, no more interest income, no buyers for foreclosed properties. Banks had used these toxic loans as collateral to borrow even more, creating a dangerous financial house of cards. Now, even major city banks are drowning in bad debt. But instead of admitting the truth, regulators have banned them from publishing real numbers, so banks quietly lock accounts, delay withdrawals, and limit transfers, anything to avoid the appearance of collapse. They're not solving the problem, they're just buying time. And that silence from Beijing? It's not just financial, it's political. The Chinese Communist Party has a long history of refusing to admit failure. To them, acknowledging a banking crisis would be tantamount to declaring systemic collapse. And with major party meetings and global summits approaching, that's unthinkable. So instead of real reforms, the government tells local officials to maintain stability. That means scrubbing viral videos, suppressing whistleblowers, and feeding vague promises to angry depositors. Meanwhile, no one explains what's really going on. No one fixes the root problem, and no one dares speak the truth. From village banks to national institutions, from rural credit unions to major lenders, the public no longer trusts that their money is safe. Businesses no longer trust that credit will arrive. Even local governments are being blocked from accessing their own budgets for social programs and infrastructure. Every delay deepens the damage. Every silence from the central bank is another warning bell. People are losing everything. Elderly citizens, robbed of a lifetime of savings. Families, unable to pay rent. Protesters, silenced or detained. What's unfolding isn't just a liquidity crisis, it's a nationwide breakdown in trust. Imagine working for 40 years, saving every yuan in a safe bank, and waking up one day to a silent notification on your screen. Withdrawals temporarily unavailable. No reason, no timeline, no one to call, just silence. In provinces like Henan, Anhui, and Hunan, families have been locked out of their own savings for over a year. Rural banks froze withdrawals without warning. Pensioners can't afford hospital visits. Farmers can't buy seeds. Young parents delay tuition payments, and millions wait, silently, hopelessly, for answers that never come. Behind closed doors, the toll is devastating, and while officials blame technical upgrades or fraud investigations, people know the truth. The system is breaking down. Small businesses have lost access to credit, contractors go unpaid, housing funds are frozen, triggering more job losses. In Zhengzhou, hundreds marched to the People's Bank branch, chanting, "Give us our money." The response? Riot police, surveillance, and silence. From factory workers to unpaid teachers, the movement is growing. Their demand is no longer just about cash, it's about dignity. One protester in Hubei put it simply, "If I can't even withdraw my own salary, what rights do I have left?" Millions now suffer in the shadows. Migrant workers wait months for wages. Some sleep in unfinished buildings. Others survive on food handouts. The fear is spreading, not just in villages but in cities like Shanghai and Shenzhen. Office workers now stash cash under mattresses. Engineers divide their savings across banks. Quiet panic is turning into a nationwide slow-motion bank run. And with that, something deeper is collapsing. Trust. People are no longer spending, borrowing, or investing. Consumption has frozen. Private capital is fleeing. Economic activity is stalling not from lack of money, but from fear. And no amount of propaganda can fix what fear has already broken. The question is no longer if China's banking system is in crisis. The question is, how far will this unravel before it can't be fixed? If even state-linked banks are locking out depositors, what else is being hidden? This is no longer about mismanaged lenders. It's about a system unwilling to admit failure, more obsessed with control than correction. Every day without transparency deepens the divide between the people and the state. The next spark won't come from Wall Street or Washington. It'll come from within, from millions who feel robbed, silenced, and betrayed. And once trust is gone, there's no easy way back. If you found this eye-opening, subscribe to China Truths for more uncensored stories from behind the firewall. What's your take on this crisis? Drop a comment. We read everyone.
Please share your thoughts in the comments section below. We will keep reporting on the COVID surge in China, so don't forget to subscribe to our channel and turn on the notification bell to get the latest videos. And thank you for tuning in.